Hello again, guys. It's Michael here with the supply and demand market report looking at cryptocurrency. It's not something we've looked at often on this channel, but a few of you have written me asking me to look at it, and we do look at it on the roundtable because some of us in the group are, cryptocurrency aficionados. I don't trade cryptos, just to be clear, but I do chart them because I have friends and traders on the roundtable who do look at them. So I'm going to look at three of the more common ones: Bitcoin, Ethereum, Litecoin. If you have any others you wanted us to chart in these videos, just leave a comment below, and I'll be sure to include it. I'm hoping to have maybe 3 or 4 more max, so that we don't keep making long videos and keep the videos to the point and nice and specific. Okay, so again, timer on, 10 minutes. Let's see if we can do it in under 10. All right. So looking at Bitcoin, it has had a good few months. It's coming off the lows. It's ended the downtrend. It started an uptrend. It's still negotiating the most significant supply zone. But it is, again, not showing that enthusiasm to fall like we saw in the last video. I forget which market it was that we had that on. I think it was the FTSE? I can't remember. But again, that concept is everywhere today of waiting for the move away and the stay away, not just the move away. Again, if you look when prices hit that supply, you had a rally, you had 3 periods of basing, and you had the green candle that moved out. And what happened? Railroad tracks. Immediately prices returned to that level. They tried to rally, but eventually prices punched through that demand. So it's another example of being patient and waiting for the setups to actually form. Because there were traders who would have traded seeing that imbalance to the upside, prices are pulling back, and they would have been pulling the trigger. Again, sometimes it works, most times it doesn't, and you always want to be making sure you're taking the higher probability trades, especially as probability is very, very difficult to measure in price charts and markets. Okay, so right now this is the demand zone below. Strong imbalance to the upside, negating any supply that was at these highs, and now it's pulling back. There will be groups of traders who are looking at, previous resistance becoming support. They're likely to be looking at this really, really poor structure demand zone. You can see here on the daily, I'll use an arrow so you can see what I'm talking about. I circle that because of that concept, because that technically is the demand zone that took out those highs. All right, so I've circled it. You can see where it's at relative to the weekly levels. It's not one that I would recommend trading to my friends on the roundtable or anyone that I coach or mentor, but it's one, lessons we are always learning in the markets. It's what are the ideal scenarios, ideal setups, and which ones are not, so that we filter those ones out. Right now, again, very contemplative move to the downside, suggesting that the sellers are not having it all their way. They are taking out buying levels and beginning to hold supply, as you can see on the daily here, but it's not being sort of slaughterhouse type of thing for the buyers. It's contemplative. So let's see how far it goes. If it does start to turn, then we'll be more comfortable going long once we see that buyers are beginning to say, enough now. We're going to, continue our journey to the upside, which we started already on the weekly. So keep an eye for the daily. When you start seeing daily supply zones being removed, that might be the first indication for you. Okay? But for now, those are the levels that prices are dealing with. Supply up there and demand down here on the weekly. Ethereum. It is also an example of why it's good to wait for the market to accept imbalances when they're created. This was a very strong imbalance to the upside, as you can see on the weekly. I'm referring to, let me take the magnet off, I'm referring to this candle, and I'll blow that up for you. I'm referring to this candle here. Big imbalance up, immediately rejected railroad tracks. Immediately rejected, coming back into the demand, and it's just dancing in that level with no big move either way. It's not the kind of scenario we want to be in. The momentum is still up in this market. It is still negotiating this supply zone, which has been severely tested, obviously tested a lot the first time around, came down. Significant thing to note is it didn't make new lows. It had lower highs, which is, typical in a downtrend, and lower lows. But it didn't go on to make new lows, which would have made it quite suspicious for us. And then it went up again, and it went all the way almost to the end of that level, and it's again beginning to dance in that level. It's holding, which is interesting. It's not again falling with enthusiasm, which suggests again the sellers are not getting all their way. And the fact that this supply zone on the weekly has already been severely tested, at least once, and then the depth at which it went in, it's suggestive. It's never, certain. It's suggestive of the likelihood of, buyers breaking through that zone, in which case this level may be the one that works, or they, take prices a little below that low there, and then trap in people and then go up. So just be careful with Ethereum here. It's going to go one of two ways. It always goes one of two ways, but particularly for the reasons that I've just described. Okay. And last, we've got Litecoin. Litecoin's been better in terms of allowing traders to get in the trade once it removed that supply. Once it removed the supply over there, it created a demand zone over here and rallied up into supply, which if you were trading supply and demand and, like to trade against the trend, which is more challenging. Obviously, the methodology allows us to do that. Not always highest probability, because trends can and do persist. But if you were trading that, you would have gotten a trade in here on a smaller time frame. But the bigger trade, and the way that I prefer to trade and express myself within the methodology, is waiting for these pullbacks in here. So that was the idea for this one. Now, again, railroad tracks have failed. You can see another example of the railroad track there, a big imbalance out of that rally base. Rally, talking about this imbalance, and immediately railroad tracks prices just slice through that level, and they're now just moving in and around here trying to decide what to do next. Okay, so the fact that again it's dancing around this level and not really falling from it is more supportive towards a bullish breakout, but we never know. Might just be that the sellers are out of town and they're taking their time. But for now, you've got the pattern of, these higher lows and higher highs. Note, though, something before we finish, final observation, and then we're done. Hopefully it's under 10 minutes and I met my goal. The rally from this demand zone, it hasn't made a new high yet. So that's a cautionary thing for anyone who's long. managing the trade is really important. That's one of the things we would have noted. You would have been out of your trade if you were trying to get, as close to those highs. Hopefully you were not aiming for the exact high, in which case you would have been sorely upset because it teased you and just fell away. But, given the way that supply and demand traders are trained to trade, you're not looking for that exact high. You would have taken your profits before that high, and then watching to see what would happen, or at least managed your stops. So that's where this trade is at right now. It's the trade management and the bulls and the bears, as always, in every market, trying to decide who's going to have the upper hand. So that's the cryptocurrency market report using supply and demand levels. I hope it was useful. Thank you for watching. Again, if you wanted us to look at more cryptocurrencies, the first 3 that get put in the comments, I will add them to the market report for the next time. Thank you very much. Take care of yourselves. Bye for now.